Today, we sit down with Dr. Tudor Francu, who is a Romanian immigrant who came to the United States to practice medicine, but quickly found himself itching to get into real estate. Now, Tudor has invested over 5,000 apartment units and shares his lessons learned both as an LP investor and as an active general partner on these deals. If you want to learn what it takes to go from W-2 to LP investments, as well as being an active general partner, you don't want to miss today's conversation right here on Multifamily Insights. Now, Dr. Tudor Francu is an experienced and accomplished real estate investor with a remarkable career spanning over 15 years. Now, throughout his career, Tudor has personally managed and overseen the operations of over 30 single-family properties in Baltimore. He's also managed two multifamily buildings of 13 units total, and he's invested passively in over 5,000 units. Let's welcome to the show, Dr. Tudor Francu.
Nice to meet you.
Nice
Hi,
to
John.
meet you
How are
as
you?
well. I'm good. Listen, you've got a wealth of experience, so I'm super excited to jump into this and talk to you more. But give our listeners a little bit more on your background. Take 2 minutes and fill in some of those gaps.
Yeah, sure. Nice to meet everyone. I'm happy to be on the show and share some of my experiences. I am an immigrant from Romania. Came here when I was 28 years old, and I'm a doctor, trained. I did my residency here in New York and followed the path that any doctor does. And got into my anesthesiology practice. Been very active over a few years. Got my own group formed and got some contracts with different centers. But in the same time, I realized that this is going to be a long rat race for me if I'm going to do that. So I was trying to look into different types of investments that I can make along the way. And I'm coming from a communist country that didn't have much exposure to investments in general. My only type of investments, historically speaking, from my family, from grandparents and all this stuff, was basically two things. Either you save cash under the mattress, or you buy land or properties. So I did both of them actually here after I came in United States. So it's a very simple recipe that you save as much as you can and you start investing what you saved. That's how I got into real estate. I went to one of the first meetings. I remember early 2000s, maybe it was in like 1999 or something, when Robert Kiyosaki was going around the area with his wife and have some little seminars about what real estate investing means and what you can do in this field. And I was very fortunate to meet him personally and got his autograph on one of his first books. And whoever didn't read that should. Rich Dad, Poor Dad, and got formed into that kind of mindset that he had. So I started investing in single family homes initially. We got up to about 30 of them in my portfolio, and I realized that I need to scale up at some point along the years. I sold that portfolio, got into multifamily, got some couple of small apartment buildings, got my feet wet with this type of investment, and went up to become a general partner in some bigger syndications with a group of people. And now I'm at the point that I still have some of my apartment buildings, but I also got into bigger units, like 200, 300 units that we manage and own. I'm at a point that, I learn every day. I'm sure there's something above me that I need to reach out to. And I'm on a journey that, it's interesting, it's exciting, and hopefully people will learn about this and follow on that.
I love it, man. You hit on a lot of great topics, right? A lot of great themes, but you came from Romania, moved to the United States at 28. you're a doctor, so you did everything the right way. But you mentioned that you quickly realized that you really needed to have kind of a plan B, or it was a long retirement journey doing what you were doing. So growing up in Romania, there were two ways people kind of worked on finding their finances. One was saving money under the mattress. The other was buying land or buying properties. So when you got to America, you kind of focused on those things, slowly started building up your personal portfolio of single family houses, ultimately started to get into more multifamily, and then ultimately getting into being a general partner on some larger apartment deals as well. I want to go back to kind of that transition from, working in a very prestigious field. We have a number of listeners who are medical professionals, and I mean that's something that is not just prestigious, but it's the thing that if someone could draw up, like, when you're a kid or a teenager, like I imagine your parents were very proud, and like you checked every box they could have imagined to, become a doctor, to move to the United States. Like, I don't know if there was more that they probably could have envisioned, yet you felt there was something that was still a void, and you felt like, you know what, I need something else monetarily to invest in, because this path is going to take too long. Can you just add some context to that? Because I know our real estate investors get it, but I think for many outsiders, it just feels like it just feels like maybe we're missing something, or you're solving a problem that's not a real problem. So maybe you can just talk about that more.
Yeah, it's an interesting position, I would say, to be in.
Yeah.
When when you're an immigrant, and especially if you're a doctor and medical professional, you come here. Um, that's a great opportunity. That's something that many people would love to do, and especially coming from those former communist countries, it's a goal that very few get to live that. And I was very fortunate. I worked hard for it, but there, sometimes you make your own success along the way by kind of guiding your mindset where you need to get out of your comfort zone, and that's what I did. I mean, not many people, just pack their luggage and go in a different country, at 28. I haven't met too many of them. It's an unknown thing. It's a very uncomfortable thing to be in. And when I came here and I started practicing medicine, I got comfortable again. And I'm always a guy who is looking to get something more out of life. We only have one, so we need to make the most out of it. So at that point, I was like, okay, what else is out there other than practice a successful medicine and get a good salary or whatever income? And the thing is that the more money you make, the more money you spend. That's the trend. So at some point, the biggest expense that I had was my taxes. I got to a level of income that I got, a very high level of taxes. And I was thinking, well, what can we do to minimize that expense? Because that's the biggest one in your life. And obviously, you can avoid taxes and death, right? Those two things that we can't get around. And I have nothing against paying taxes, but it's something that can be strategized, I would say, and see if you can take advantage of some of the laws that are out there, and they're perfectly legal. And like you said, investment in real estate is one of those things that allows you to do what the government wants you to do. And there's some very specific areas that they need help with. And if you do it as a private person, they give you some advantages, and some tax advantages for that. So, I start doing that. I start connecting to people that are successful in doing that, learn from them, got some mentors along the way, and kind of branch out and be again uncomfortable with what I was doing. Uh, it was the scariest moment of my life when I got the first property and I closed on it. And I remember going there. It was a one bedroom, one bath apartment that I rented out, and I made, I don't know, $50, $70 a month, something like that. And painted it myself, changed the blinds myself, tried to make it nice and comfortable for the tenant. And it was very rewarding. But that's the first step. You need to make the first step, and you need to make the second step, and you need to make the third step. It's one step at a time. Nobody can become wealthy or successful overnight. So I kept doing the same thing over and over and over again over a number of years with this recipe up until I got to a point that you own a certain amount of properties and you think, okay, what's the next step? The next step was not at that point to get more properties the same time at the same way, but scale up in the type of properties you get. So it's again, I think to answer your question exactly is learn how to get out of your comfort zone. And by doing that, you discover things that are better, that are helping you in your life, that you didn't know about. And we don't know what we don't know. So we need to find out by
Yeah.
getting out of your comfort zone.
I think the other thing I hear you say, though, is that when you work hard and strive for success, there will be new challenges that arise, but you just keep solving those problems. So, again, we talked about you moving from a communist country to come to America at 28, being in the medical profession, making good money, having the taxes. And the real estate journey really started from your desire to solve the tax challenge. And as you did that, you bought that first property. And then it was like, okay, well, how do I do more of this? How do I scale this? And that required you to think a little bit differently and find a new solution or a new approach. But all of that starts from the first step and finding some initial success and then building on that success. And it's okay if you don't know the entire road. I think oftentimes, our listeners and investors, they've got to see like the 5 year projection or the 10 year projection. And sometimes you just don't know. You just have to solve the first thing in front of you right now.
Yes.
Take the next step. How do you get better at that? How do you generate some more income? How do you lower your taxes? How do you diversify your portfolio? How do you have a plan B? Just start doing that and then figure out be ready to solve the next challenge as it pops up because you don't know what it is. It could be property management, it could be cash, it could be you need investors. I mean, it could be anything, right? But you won't know that until you solve the first challenge. And then I would say you said something that resonated with me. It's like that first property was a scary moment. You said the scariest moment of your life. And again, I'm going back to someone moving from Romania to the United States. Like I feel like there's some more scary things than buying a property, but I get your point, right? Because and there's a book, it's called The Jolt Effect. I'm listening to right now, and what it gets at is, there's a fear that people have with action because when you don't take action, when there's inaction or you don't make a decision, then it's kind of elongated of the ramifications. So, for instance, if you're faced with two situation or two options, one is you do nothing and let the situation get worse. One is you take action, but there's a 50-50 chance it may get better or it may get worse. Most people would actually feel better doing nothing. Because if you take action and it gets worse, or it was the wrong action, or it wasn't the right person, that's when people really get upset because they know they made a bad choice and they lose the confidence in their own ability to make choices. And that paradox really cripples people from the ability to take action and to move forward. And it's why so many people have analysis paralysis because they just can't decide. So I understand your point on that being the scariest moment. And I wanted to call it out because the truth is, if you take action, you've now set something in motion where you can now just solve the next challenge, whatever that challenge is, because you won't know what it is. But now you're down this path of just taking action. And that is what leads to success, right? It's not standing still and being frozen and just praying things get better without doing anything. It's taking action, and you have to keep taking action, keep solving challenges, and that ultimately leads to success. I said a lot there, but what are your thoughts on that?
No, I think you said something very important here, that you need to take action. And I remember after reading the first book of Robert Kiyosaki, he went on and got several books out after that. And there are many people in my circle that start reading all the books and reading all the books and rereading all the books. And they didn't take any action on them. And after the first book I read, I was like, okay, well, I'm sure I don't know a lot of things, along the way, and I'll have to figure it out. But we need to start somewhere. So that's why I said you need to make the first step at some point in life.
Yeah.
Um, and don't get me wrong, I got a lot of wrong steps too,
Yep.
but I took the step, and I got my course corrected along the way after that. But you can't be successful if you don't fail.
Yeah.
There's no such thing. Nobody's perfect. Everybody makes mistakes, and you learn from your mistakes.
Yeah.
So I have, I met a lot of people who are in real estate investment field that are very skeptical of talking about their
Yep.
failures, and I'm not one of them. I had a lot of failures along the way. I learned from them, and I got better. So don't expect everything to go perfect from the first time, but otherwise, there's nothing going on if you don't take the first step.
Yeah, we're going to ask you about the failure when we get to kind of our ROI line or ROI portion of the conversation. But I do want to ask you about kind of your transition because, for many folks, becoming a general partner is a goal for a lot of our listeners. Becoming an LP investor is a goal for many of our listeners. As you were building up your own portfolio, what inspired you to go from kind of being the property owner, the landlord, the investor, to being more of a passive investor on these larger deals?
Yeah, it's an interesting question because I started off as being an owner and being a landlord. I didn't invest passively initially when I got my single family homes. Then when I thought about scaling up from that point, I was scared and I didn't know how to do it. And while I was still holding on to those properties, I started investing passively with other people to see how is to be a passive investor. What kind of communications are coming from them? What's the length and life of an investment as a passive investor? And you get to know a lot of people by doing this. I mean, I certainly would advise people before becoming a general partner, before start owning large properties, to be a passive investor, to see what people are doing as active as general partners, and kind of start sifting through the whole mass of BS, I would say, that's coming from a lot of people, and see who are the real good communicators, the real good managers out there. But again, you cannot do this unless you start putting your feet in the water with several groups like that and start investing passively with them.
Did you know that you wanted to be a general partner when you started investing passively,
I wanted to be a general partner.
but you were scared?
That was my final goal, but I was scared to be a general partner initially. it's easy to say, oh yeah, but you owned several single family properties, you own real estate by that time. It was easier for you to become a general partner in bigger apartment buildings.
Hmm.
It's a different animal. um, Owning single family homes, it's a different animal than only owning multifamily apartment buildings, because the business itself is different.
Yeah.
You deal with a corporation that owns a apartment building, and with several partners that are managing that investment. You are when you own single family, you're the only owner possibly, and you manage or you hire someone to manage it. When you go to the multifamily apartment buildings, you're part of a group. You hire a property management company, and you become connected to those people for 5, 7, 8, 10 years, depending on the life of the investment. So if something doesn't go right, it's like a marriage. You're either stuck in that thing or you divorce. Um, Either way, it's not a pleasant situation to be in. So you need to make the decision very well in the beginning. Like in life, right? The biggest decision that we make in life is who our partner is. Um, the same thing in investments. So yeah, my goal was to be a general partner, and I am a general partner, but I got there to several failures and several successful investments, and I had to learn a lot along the way.
I appreciate you sharing that, right? Because it's comforting in a way, just to hear your story. Because I think what happens to a lot of folks is you get a deal, you have some success, smaller multifamily or single family house. I know for myself, I started with a 2 unit, then a 3 unit, and I'm like, hey, you know what? This is going well. And I came across an 8 unit building, and I ended up buying that myself with my wife. And it was around that time where we wanted to pivot and scale. But quite frankly, I had a lot of concerns and trepidations. And I ended up hiring a mentor to help me. But I started to seek out counsel of, okay, how do you scale, right? I had read Rich Dad Poor Dad as well. And I believed in the idea of investing in multifamily. I just didn't know how to do it. And quite frankly, I was running out of my own money. So I knew that I could only scale as much as I could save. And that wasn't a lot, especially when I was having my growing my family. So I tell people all the time that there's really three ways I see people scale into multifamily. One is what you've done, right? You start as a limited partner, you learn from that lens, and then you can transition to the general partner side. The second way is one that I did, which is you hire a mentor or coach who can walk you through the process and give you the systems, give you the resources, the templates, and help really guide you and nurture you along your journey. And then the third is a more tricky way where maybe you do something else, maybe flipping houses, and use that to generate cash and use that cash to go out and buy apartments. Um, I tried to do options two and three. The flipping did not work very well for me, particularly when I was working a full time job and trying to leave out the office to go and check and see if these guys did what they said they were going to do. And oftentimes they didn't. But I tell people all the time, one and two make a lot of sense because if you are a busy professional, if you're making pretty good money at your job, investing passively is great because it gives you a chance to learn while you earn. And what I've found is a lot of people think they want to be a general partner until they see what it takes to be a general partner. And then they realize, no, I just want the money. I just want the returns. I don't want to have to deal with everything that comes with it. And if you do find yourself loving that and asking more and more questions and being really intrigued by all means, that's a sign that maybe you should be a general partner. For you, you kind of started off with the idea that you want to be a general partner. You invested passively. Sounds like you learned a lot through that process. Some things that went great, some things that didn't go great, and then ultimately became a general partner. Tell me your philosophy as a general partner, particularly when it comes to your investors.
Yeah, so I learned a lot from the people I invested passively with. Those groups, some of them were really good, and some of them or really bad.
That's a wide
And
range.
yes, and you learn what not to do,
Yeah.
um, especially regarding the passive investors. I think whatever happens with the investment, it's not necessarily all under your control. There are market fluctuations, there are, pandemics hitting, interest rate hikes overnight, and all this type of things that economically you cannot control as an individual. But the way you translate that into your investment community, into your investors, and communicate with them and explain and be transparent and level up with them of the situation you're in. And there are many situations where things didn't go well. And, you gain the trust by being truthful all the time. And I remember my first general partnership attempt, I would say, that I had was a failure. And I'm not scared of talking about this because I'm sure there are many people out there that had the same situation I was in. And you don't hear about those things from general partnerships groups very often, but it happens. And the thing that 2 weeks before the closing on a bigger property, we raised the money, we had everything lined up, uh, paperwork drawn up, signed, everything goes to closing, and all of a sudden the financials that we discovered prior to closing were not real.
Oh, wow.
And we had to back down as a common decision of the partnership group to back down from purchasing this property before we got into any more trouble with it.
Wow.
And we went back to the investors and we said, look, things didn't really transparent like we hoped to, and we had some surprises along the way, and we have to back down from this investment. We gave the money back and we moved on. We lost a lot personally, as a partnership group, because you take a hit, putting the money down for the closing and escrow money. But we saved millions and millions of dollars of the investment community. And I think people are very, very happy with that decision. And I think, after that, a lot of people came back to our group to invest with us just because of that failure.
Wow.
So I think the most important lesson here is to find someone who is very open to communication, very available to communication, and very transparent with what is going on with that investment. There are certainly people out there that they're more prone to hide things, and at some point along the way, you're going to find out. So there's no point in covering up anything in this branch, because at some point things are going to come out, and your reputation and your trust and your caliber will go to zero because of that. So you need to keep communicating to people exactly what the truth is about that investment. And that's my first criteria of investing with anybody from now on.
Tudor,
I'm not,
I
yeah,
want
I'm
to
not
recap that
looking
because
much
that's
for
great.
the,
Yeah.
details on location, on
Yeah.
financials, on, I don't know, type of building or things like that. People are the most important.
Tudor, you said a couple things that jump out. First of all, communication. Communication being key. And you talked about the truthfulness in the communication, being involved in some really good deals, some really bad deals. And the point you're making is there are things that can be controlled and things that you can't really control. but we can't control how we react and how we communicate and how we present ourselves. And that's really the sign of a good operator. It's the communication and being truthful and transparent with what's going on. And that's just, it's so important. And you talked about the first thing you look for is really the people, is the individuals you're looking to invest with as opposed to the returns. And this is something I always, tell people is like, so many folks rush to what are the returns? They jump to the IRR, to the return metrics, and they use that as a barometer of whether or not they should invest a deal or comparing deals. I remember I had someone, we had a deal, it was around a 14.9% IRR projected, and they were looking at my deal and another deal, and that deal was a 16.5% IRR projection, and they invested in the other deal. And I'm like, you didn't compare the amount of risk, the age of the asset, like how we were operating the deal. I'm confident, we crushed ours, and that deal's probably not doing very well. Actually, I know that deal's not doing well because I know the operator. But the point is, it's very easy to get caught up in the numbers and the returns when in fact we should really pay attention to the people. So I appreciate you sharing that. One of the things that I always tell LPs whenever we're having an initial investor call, if they don't bring it up, I actually will either push them to, or if they ask, hey, is there anything I should have asked that I didn't? I love to ask people to tell me about a deal that didn't go according to plan, because I think that illustrates the point you're getting at. An operator who is maybe deceitful or looking to hide, maybe the deals that didn't perform as well, they're not going to talk about it, or they're going to, pivot and push the blame on the market or someone else, and won't take accountability for those kind of challenges. And when I ask the question, or if I'm asked the question, I always like to focus on what we can learn from that deal, what we learned in a process, how we have adjusted our approach, and ultimately trying to minimize that risk from happening again. You talked about working with really good operators and really bad operators. Can you give me maybe one thing you learned or emulated from a really good operator, and one thing that you noticed or saw from a really bad operator that you said, we will absolutely never do that?
Yeah. So along the years, I learned a very important thing, that the operators that have a vertical team integrated in their operations are much more likely to succeed than the ones that don't and hire different companies for different jobs. In other words, I have a couple of groups that I invested with that had, a property management company hired a third party one, um, a landscaping company hired, a third party company, a cleaning company the same way hired as a third party contractor. And all these people for the operations of the building that came in as independent contractors, basically, to work for the group. It's very hard to manage those things because those companies have different values, different targets, different agendas. And it takes a very hard hand operator to keep them under control very well. Compared to the operators and partnerships groups that are vertically integrated, you know, most people say, in terms that they own or they formed their own management company. They have their own landscaping company and cleaning and whatever else you need in that operations of the building. And those people work for that group. So it's very easy to control them, and it's very easy to task them with different jobs that they need to be done. At the end of the day, at the end of the week or day or month, they report to you directly. So I found out that those groups are they have a much higher rate of success than the other ones. Um, so I'm looking right now to develop that kind of model and get together with people that have the same concept and same values as me right now to form that kind of concept. I hope that helps.
Yeah, listen, I love it. And I mean, part of it is when you're vertically integrated, you're taking accountability for every element of the operation. You're not just, hoping to hire the right person and then you're dealing with their issues. And that's always a challenge, right? There's nothing wrong with third party management, third party vendors. And it's a necessary option for most operators starting out. And you may
Yeah,
not
no,
want to have, 10 different companies, right? You may not want your own cleaning company. But the thing is that you need to be able to be accountable for the results. And that's what you're getting at, tutors. Like
exactly.
you've got to, it's these every company has its own value system, mission, goals, compensation structure, and you're not privy to that all the time. And just an easy one that most people understand is when it comes to property management is leasing. You know, as investors, as operators, we want our properties filled. So we would want to create incentives for our leasing team to keep the property filled. Well, guess what? Usually the leasing team gets compensated on new leases. They make more money when they put a new tenant in than when they retain or sign a new lease for an existing tenant, right? A lot of times they get 1 month's compensation and 50% of that when they renew a lease. But either way, they're incentivized on a new lease or retaining that lease, and that doesn't necessarily match up with what we want as operators. And that's just one example I think most people
Yeah.
recognize. Versus if you had your own company, you would probably change that compensation structure so that it helped the overall bottom line of the asset and your investors, which is probably more driven by NOI than it is about leasing. Because again, when it comes to leasing, I remember we faced something where we would sign new leases, and 6 months in, less than 6 months, that tenant had to be evicted. And then we would have to bring in a new tenant. And then this leasing agent got compensated again. I'm like, wait a minute. There's got to be some sort of negative consequence as well if you sign a lease and this person doesn't even make it throughout their entire lease. So this is what we're talking about. This is just one example, but the point is, when you're vertically integrated, you can solve these challenges and kind of preemptively identify what doesn't align with the overall mission, where it may be harder if, you have an operator who is hiring a third party management. You may not understand fully how that company is structured or how they're incentivized, or are you getting the right people on your team? Because maybe you're not even able to talk to these people and interview them to come work on your project. So these are some of the things that come into play. Um, Go
Yeah, the
ahead.
most important person in a management of a building, an asset, is the leasing agent and the staff on site. Like if you don't realize that as a ownership group, you're missing the point. Those people are the most important people on site that need to be well compensated, well incentivized, and a great personality, to attract people in the door and keep communicating with them and keep following up with them. So most of the time when you hire a property management company, they'll send a leasing agent that it's paid a salary, a fixed salary that, it's a small salary. What kind of incentive do they have to get your occupancy up? Unless you come in with your own people or you incentivize them in a way that, like you said, you keep the tenants once you put them in.
And keep them
But
paying.
yeah,
Don't just get them on the lease. Actually, make sure you're collecting the money.
right.
But yeah, but you get the point. I mean, there are obviously a lot of things there where when you're running a business, you want to set it up for success, and obviously those companies are vertically integrated. You have more control over those levers, which is why it makes a lot of sense. Hey, Dr. Tudor, we're up on our time, but how can our listeners get in touch with you?
Oh, My website is probably the best way. It's www.stellarmultifamily.com. I also have a great podcast. It's called Stellar Success Podcast that people can listen to and watch with different topics in real estate and investments. And, just message me through the website. I'm on LinkedIn. I'm on other social media platforms. You can easily find me.
There you go. Well, let's move on and go to our round of insights. When you think you found a great deal, asking the right questions could be the difference in finding a stud or a dud. Listen, we've put together a new guide to help you out. It's called 7 Questions You Must Ask Before Investing in Apartments. Now, in this guide, you're going to learn how to uncover red flags, quickly identify underwriting risk, vet sponsors and team members, and confirm key assumptions. Now, this is a guide that's going to help you be a better investor, whether you're an active investor or you're a passive investor looking to partner with other operators. Asking better questions is the key to identifying great opportunities. So download this free guide. Go to our website, casmoncapital.com/7questions. That's the number 7 questions. And you can access this free guide today. To make it easy on you, though, we've put a link in our show notes. So you go to the show notes, you can click that link and access the guide right now. This guide's going to help you make better investment choices, asking the right questions to build your portfolio. So be sure to download it today. We talked about this, but I'd love to hear your thoughts. Give me a failure or an apparent failure that sets you up for later success.
I don't know how much time do you have. Yeah, so I gave you an example with that first deal I got as a general partner. But another failure is people that I got into an investment as an active general partner, and I found out at some point that one of the partners associated with me was trying to hide the accounting balance in a way to us, to the rest of the partnership group. So it was I would say, a family affair, I would say, that didn't work well. So it's very important to really choose the people you work with really well.
All right, good one there. Great. I appreciate you sharing that insight there. Give me a digital or mobile resource you recommend for our listeners.
A digital or mobile resource. So I think there are a lot of influencers, I would say, in real estate out there in social media, which are good to listen to. But I think the best digital or mobile resource would be for you to go and look for people that are very successful in what they're doing. And there are many out there. One, just a couple of them is Pace Morby, which I love. His concept of investing in real estate. And there are other out there. Robert Kiyosaki is probably the most important person that influenced me in my real estate journey. And I'm sure there are many resources with his mindset out there.
Love it. Give me a book or the book that you've recommended or gifted the most in the last year.
It's not related to real estate per se. It's related to mindset and I would say success clues. And it's this one that I have right here. It's called Tools of Titans by Tim Ferriss.
Love it.
And I think includes a lot of personalities, a lot of examples of what it takes to be successful. And it's a very insightful book. I would definitely recommend it to everyone. And you learn from everybody, no matter what kind of background you have, what kind of field you're in is just the way he brings up people that had failures and successes and gives an example basically from each field in life.
Love it. It's a great book. Give me a daily habit that helps you stay focused on your goals.
My daily habit?
Yes, sir.
Yeah, so I think waking up early. It's the first habit I have. Not because of my profession, but because that's how I formed. I do most of my work in the morning. I think the morning routine is the things that carries me through the day. I wake up, I do certain things in a certain way for the first hour or two of my day, and then gets me off to a good start for the day.
I love it. All right, you are, again, you've done all sorts of types of investing. So give me your number one insight for transitioning into being a general partner.
As I said, I think finding the right people is the first number one thing for me. And like in life, it's all about people. It's all about who you associate yourself with, and who you learn from. So make sure you learn from the people that are doing the right thing in that branch, and you associate with people that are truthful, sincere, and they communicate well.
All right, you are in the Baltimore area. Give me your favorite place to grab a bite to eat.
There's a Greek restaurant that I love. That's kind of my go-to place when I want to just sit down and think. It's Romilo's in Savannah Park.
All right, sounds like a great option, man. Tudor, you gave us a lot of great stuff, man. I want to just appreciate hearing your journey. I always love hearing, folks overcome challenges, and in your case, being Romanian, moving to the United States at 28, working as a doctor, making money, doing all the things that we're supposed to do, but then having a new problem that you had to solve for. And ultimately, that leads you into real estate investing, first in single family, then getting into investing passively before becoming a general partner. But just sharing too, like even that, there are challenges, and recognizing when we are investing, we're ultimately investing with people. So understand the character of the individuals you're investing with. Are they truthful? How well do they communicate? Are they transparent? Ask good questions to get to know the people, even more so than just asking about the deal. I mean, the returns will be there if you invest with the right people. And I think that's so, so important, and just something we want to continue to emphasize as well. Find the right people. They will know how to take care of the rest. So find good people to invest with, and that solves a lot of your challenges. Again, if folks want to learn more, we'll put a link to your website in our show notes. And we just want to thank you again for coming on the show today and being a great guest. We look forward to staying in touch with you, and I hope you have a great day.